Bitcoin has been surging recently, hitting a new high of 73,800. But what's driving this incredible growth? Well, as you all know, Bitcoin's been making headlines with its recent price surge, reaching an all-new-time high of nearly 74,000 and surpassing its previous high of 69,000. Well, this is because big players are entering the Bitcoin game, and their arrival is a major driver in the current bull run. Traditionally, large institutions like hedge funds, investment banks, and pension funds haven't been major players due to a lack of familiarity with cryptocurrency, regulatory uncertainty, and the difficulty of managing large amounts of Bitcoin. However, the landscape is changing rapidly. The introduction of Bitcoin exchange-traded funds, ETFs, have been a game changer. These function like any other ETF on the stock exchange. They hold a basket of Bitcoin investments, and you can buy and sell the shares throughout the day, similar to a company stock. This allows institutions to gain exposure to Bitcoin price movements without directly having to buy the cryptocurrency itself. This simplifies the process significantly and reduces perceived risks. It's able to provide easier access through familiar brokerage accounts, reduce complexity by not having to manage their own Bitcoin wallets, and potentially lower fees compared to directly buying Bitcoin on an exchange. The approval of the first US Bitcoin ETF in October 2021 marked a turning point. Since then, several more Bitcoin ETFs have launched in 2024, attracting billions of dollars in investments. For instance, a single day in 2024 saw BlackRock's iShare Bitcoin ETF purchase over $778 million worth of Bitcoin. This demonstrates the immense interest that capital institutions are bringing to the table. A study by Fidelity Digital Assets found that 88% of institutional investors are interested in digital assets like Bitcoin. A report by Arkin Research also suggests that institutions now hold between 2 to 4% of the total Bitcoin supply. Additionally, analysts at JP Morgan and Chase estimate that the total value locked in Grayscale's Bitcoin Trust, a popular investment vehicle for institutions, could reach $50 billion by 2025. These figures highlight the growing role of institutional investors in the Bitcoin market, fueling the current bull run and potentially shaping the future of cryptocurrency. Macroeconomic factors like inflation and geopolitical instability are pushing institutions to seek alternative investments. Bitcoin, with its limited supplies, capped at 21 million coins, is increasingly seen as a hedge against inflation. Unlike traditional currencies which central banks can print at will, Bitcoin's inflation rate is predetermined and gradually decreases. This scarcity, combined with its growing adoption, makes it an attractive option for institutions seeking long-term value storage. However, unlike gold, where existing supplies can be discovered through mining, new Bitcoin are created through a process called mining. Every 4 years, the number of Bitcoins awarded to miners is cut in half. This event is known as the halving, further restricting the new supply entering the market. Following the 2012 halving, Bitcoin's price skyrocketed by over 1,100% within a year. Similarly, after the 2016 halving, the price rose by over 1,500 within a year. And more recently, after the 2020 halving, Bitcoin's price surged from 9,000 to 60,000 within a year. As of March 2024, over 90 million Bitcoins have been mined, leaving only about 2 million to be mined in the future. With the upcoming halving, the rate of new Bitcoin creation will further be reduced, potentially putting upward pressure on its price. Bitcoin's influence is beginning to transcend the financial world, and several exciting developments are contributing to its wider acceptance. First, we are seeing mainstream adoption by corporations. Leading companies like Tesla and MicroStrategy have added Bitcoin to their treasuries, demonstrating their belief in its long-term value. According to a survey by CNBC in late 2023, 84% of institutional investors believe that Bitcoin is a viable hedge against inflation, indicating a shift in how traditional finance views this digital asset. Additionally, payment giants like PayPal and MasterCard are now facilitating Bitcoin transactions, making it more accessible for everyday users to buy and sell Bitcoin. A study by Forrester Research found that 27% of adult online shoppers in the US have expressed interest in using cryptocurrency for online purchases, highlighting the potential for Bitcoin to become a mainstream method of payment. On a broader scale, El Salvador became the first country in the world to adopt Bitcoin as legal tender in 2021. This bold move by a sovereign nation legitimizes Bitcoin as a currency and paves the way for other countries to potentially follow suit. While El Salvador's adoption has faced challenges, it sparked discussions around central bank digital currencies, CBDCs, and the future of money. The IMF estimates that over 90 central banks around the world are exploring CBDCs, demonstrating a growing openness to digital currencies. These developments signal a growing acceptance of Bitcoin beyond just a speculative asset and suggest its potential to reshape the global financial landscape. The underlying technology behind Bitcoin, the blockchain, is constantly evolving. Scalability solutions like the Lightning Network are addressing transaction speed limitations, limitations. This is crucial as faster transactions are the key to making Bitcoin a more viable option for everyday purchases. A study by Bitcoin Magazine in 2023 found that the Lightning Network processed over 1 million transactions per day, demonstrating its potential to address Bitcoin's scalability challenges. And a study by AAA in 2023 revealed that over 300 million people globally now own cryptocurrency, with Bitcoin being the most widely held. This growing user base, representing a significant portion of the world's online population, signifies the increasing global adoption of Bitcoin. Human emotions can also play a significant role in market movements. As Bitcoin's price continues to climb, a fear of missing out sets in, attracting new investors who don't want to be left behind. This can lead to a snowball effect, further pushing the price upwards. However, it is crucial to remember that Bitcoin is a volatile asset and its price can fluctuate dramatically. According to a report by JP Morgan and Chase, Bitcoin's historical volatility is significantly higher than traditional asset classes like stocks and bonds. This underscores the importance of approaching Bitcoin investments with caution and a risk management strategy. Recent positive news surrounding Bitcoin, such as ETF approvals and institutional adoption, can create a bullish sentiment encouraging further investment. For instance, a survey by Fidelity Digital Assets in 2024 found that 80% of institutional investors surveyed plan to increase their Bitcoin allocations in the next year, demonstrating how positive news can influence investment decisions. Extensive media coverage of Bitcoin's price surge can also fuel FOMO and attract new investors, even those unfamiliar with the technology. However, it's important to be critical of media narratives and conduct your own research before making any investment decision. While the current Bitcoin boom is exciting, it's important to invest responsibly. Don't rely solely on media reports or financial advice. Educate yourself about Bitcoin and blockchain technology to make informed investment decisions. Bitcoin is a volatile asset, and again, its price can be expensive. Only invest what you can afford to lose without jeopardizing your financial stability. While short-term gains are tempting, consider Bitcoin as a potential long-term investment with potential for growth over time. The recent surge in Bitcoin's price is a culmination of several factors, including increased institutional investment, its limited supply, growing global adoption, and the influence of market psychology. By understanding these factors and approaching Bitcoin investments with caution and well-defined strategy, with so many factors driving the price upwards, Bitcoin's future is starting to look very promising. Either way, if you want to know how I managed to save an extra $775 a month with a technique called loud budgeting, I explain how in my latest video. I break this strategy down step by step so you can see if it can work for you. Don't forget to smash that like button and subscribe. See ya.